Hi, JJ here with The Art of Value. Thanks for joining me on my investment journey. Hope you're getting some value out of it too. Today I want to respond to a short video by a guy called Chicken Genius, who I think's real name is Ken. Chicken Genius Singapore. He made a video about Tesla and I just wanted to respond to it. He's got a very different investing style from me. He does quite a bit of trading. He tries to predict the market and trades on that. Whereas I'm more of a value investor, Buffett, Munger, Pabro style value investor, looking for long-term compounding, so just buy and hold, where he seems to trade in and out. He's made a lot of predictions, and he's made a prediction that the Tesla stock could go to $60. Ken's got a really big following on YouTube, over 300,000 followers, and he ditched YouTube. He left YouTube a while ago. I remember that because he had a lot of haters. He was predicting kind of the downfall of Tesla stock. And apart from value investors, I don't think there were many people like traders and growth investors who were kind of predicting that. But I was, and I kind of agree with some of the things that he's saying here. So we're going to play the clip, some of the clip, and we'll respond to it. There's also some clips he has from Elon's Twitter Spaces, which I listened to the other day, where Elon had some interesting things to say about Tesla going through a recession, what would happen. Just before we watch those clips from Ken and Elon, I'll just say that if you haven't seen my previous video where I revealed that I have just bought some Tesla stock for the very first time ever. I started at $125 and I'm willing to go down a lot, and I think it will go down just like Ken. So that's why I'm kind of interested to see what he's got to say, because as I said, I kind of agree with him. I think it could go down to 60 or even less. I'm not saying that is going to happen, but I'll put a link to that video, my previous video, in the description and at the end of this video to go and see that after you've seen this if you want to.
Elon Musk just gave a big hint and it's not good. Am I happy that my prediction of Tesla's stock at 140 coming true after 9 months? No. More people got hurt. Even the toxic haters stopped shitting on me. Come on.
So he said he made a prediction 9 months ago that Tesla would be where it is today, or 140 or lower. It's lower than 125 where I bought. After that, he left YouTube, I believe, because he got so much criticism from Tesla bulls that, what's he saying, what's he doing? And people were pretty rude. He's got a huge following, so that can happen when you've got a huge social media following, of course. And he's mostly on Twitter, doesn't make many videos. So he's saying that it's going to go down further. And he's picked out these clips from Twitter Spaces from Elon, which I listened to the other day too. Really interesting. He's pretty open about what he thinks, Elon.
Elon just went on Twitter Space and talked about prioritizing car sales over margins. Here's the clip.
Do you want to grow unit volume, in which case you'll have to adjust prices downward? Or do you want to grow at a lower rate or go steady? It's sort of a choice there. My bias would be to say, like, okay, let's grow as fast as we can without putting the company at risk, which would mean, in that scenario, profits would be low to negative during a recession, provided the cash position is okay. I think that's still the right move long term.
So let's just pick out what Elon said there. Ken's picked out a really good clip from Elon. Elon says, do you want to grow unit volume? In that case, you have to adjust prices downward. So he's talking about selling as many cars. You have to put prices down, which they are doing. They have done recently in China and in the US to sell as many cars, Elon's saying. Or he says, or do you want to grow at a lower rate or grow steady? So those are the choices. Elon's bias is to grow as fast as we can without putting the company at risk. So he still wants to grow the company, he still wants to sell every car that he makes. But to do that, if there's a recession coming, they have to lower prices. So that has consequences, and I think that's going to have consequences for the stock. The stock market might already be seeing that to a certain extent. Is the market seeing it completely just yet? He also says, in that scenario, profits would be low to negative during a recession, provided the cash position is okay. I think that's still the right way to move long term. So that's a possibility of Tesla having zero profits during a severe recession. He also said elsewhere that he thinks the recession could be as bad as 2008, 2009, which is pretty bad. And car companies, auto companies were hit really, really hard. And so he can see a situation where Tesla has no profits. And of course that will squeeze margins, which Ken talks about. And so do Tesla investors see that coming? Do they think that's going to happen, or do they think that Tesla's just going to ride a recession out easily, if indeed a recession comes along? There's no guarantee of that, but Elon is seeing that. He's said elsewhere many times in the last few months that he can see a bad recession coming, and he wants the Fed to stop raising rates. He thinks they're going too far, but I think there's a bit of self-interest there. He wants Tesla to be able to sell cars, and the auto industry has proven to be really cyclical in the past. So that's a question in my mind: how cyclical is Tesla going to be? And I assume that it's going to be pretty cyclical, just like other autos. They do sell mostly cars, even though they've got other divisions, other segments. Car segment is far and away above everything else right now, so it will bear the brunt of a recession for sure. Okay, let's see what Ken says about that.
This means he wants to sell every Tesla car they make, and the only way is to reduce price, so profit margins will be impacted.
So there, Ken's pointing out, of course, that margins will be impacted, will be reduced if Tesla sells every car that they make. If they want to do that and lower prices in a recession, of course it's going to impact margins. I think a lot of Tesla investors aren't quite seeing that happening yet. In any case, it could be that Tesla rides it out much better than other companies in that case who have more debt. Tesla has very little to no debt and a lot of cash, and Elon talked about how much cash. He thinks it's important that they have a lot of cash to ride out the recession, and I think that they could come out the other side in a much better position than most companies. But that's not to say they won't be hit hard in a recession. They could be, and I think Elon's definitely seeing that. He's been saying it.
So in order to keep demand constant, you would have to therefore decrease the price of the car. It's the only that's if you want to keep demand constant, and if you want to increase demand, you have to decrease the price of the car further. This is like Econ 101 stuff.
So Ken's picked out a clip here where Elon's making it really obvious, saying that in order to keep demand constant, you have to therefore decrease the price of the car, and if you want to increase demand, you have to decrease the price of the car further, even further, saying that there will be an impact, and that's just what they have to do if there's a severe recession, which he sees coming. I mean, there may not be a recession as much as he thinks, but obviously in China they've had it tough. The US is looking that way, and Europe as well. So frankly, as far as downside's concerned, I can see that happening, that all of these places, and even where I am in Australia and New Zealand, where the federal bank here, the central bank, is trying to induce a recession here because the housing market's so strong. So pretty much in many parts of the world that's going to happen. So Elon can see a recession coming, and they're going to have to reduce prices to the point where they have no profit, and that is going to impact margins. That's the scenario that Ken's talking about, pointing out in the short video, and I mean, I agree with that. Even though we have a very different style of investing, I do agree, and so protecting the downside I think is really important. I started at 125, but I could see it go way down, even 95% from the peak of 415. We could see coming down 90, and in an extreme scenario over 90. Remembering that Amazon came down 93% after the dot-com bubble, and I think there has been a bubble in the EV sector. I think that some Tesla investors are in kind of denial about how big that bubble was. So I think there will be a severe reckoning, pretty much a miracle if it doesn't go down more, I think. But I'm a Tesla shareholder. I'm not criticizing. I'm not anti, but I am kind of bearish short term, but bullish long term. Just like Amazon has been played out over decades, I think Tesla could be quite comparable to that, but we'll see.
Months back, I talked about demand destruction, and this is the most dangerous part of the cycle. Valuations are priced in, forward growth is priced in, but earnings are not priced in yet.
So again, I agree with Chicken here with Ken when he says that there's demand destruction, and that it's the most dangerous part of the cycle, because we've seen that valuations priced in, forward growth priced in, but earnings haven't been, and this is where earnings could get hit. And as I said, I don't think a lot of Tesla shareholders could see that coming, that it could be a lot more cyclical. If you look at other cyclical companies, the revenue goes up and down with cycles, and Tesla, this is kind of the last test of Tesla as I see it, because they haven't been through a recession or a severe recession at scale. During COVID, of course, they did pretty well, but this will be a real test of proper recession, and it seems to be that it could be in many different areas. So it's going to be interesting to see what happens in terms of earnings. That could be more cyclical than a lot of current investors think who bought it much higher. It'll be a real test of resolve, I think. It could be. We'll see what happens. It may not happen. It may be shallow. After the dot-com bubble, it wasn't particularly deep, the recession. We'll have to see what happens.
So for me, I think Tesla is cheap enough to own some shares. At the same time, I think it's only like 5% of my position. At the most, I'll increase it to 10%. My focus is elsewhere for extra alpha, extra money. Again, it's not the time to be ultra bullish. There is tightening, there's QT ongoing. The time will come, so patience.
So again, I agree with Ken when he says that I think Tesla is cheap enough to buy shares. He said up from 5 to 10% of his position. I think when he says position, he actually means 5% of his portfolio up to 10%. My position is that I started at 125 and I'm willing to go down, down, down in kind of 4 tranches. So I've kind of got 25% of a possible 10% position. From peak, I started at when it was down 70%. I'm willing to go again at 80 and at 90 and again even at 95. And that's extreme. Hope that doesn't happen, but it would be interesting. My average would be pretty low, I think, if that happens. But I'm willing to start at 125. Sounds like he is too, even though he's pretty bearish on the short-term situation, as I am. Thanks to Ken for these video clips pointing out succinctly what he thinks, and I kind of agree with it. I haven't agreed other times when he was extremely bullish earlier on because he's a trader, so he kind of momentum traded it up. I think I haven't followed his work closely, but I believe he kind of was pretty in deep for Tesla on the way up. I, on the other hand, thought it was a bubble. I wouldn't touch it, being a value investor. Only when it starts to go deeply down would I be interested, which I am now. So I waited for since early 2020. I kind of missed buying it earlier than that, and then kind of just waited it out. And here we are back to just over mid 2020 again. So it's interesting times, and there's a lot of water under the bridge in terms of profitability. Since 2020, it's grown a lot, and so it's quite a different position, and we're back pretty much at the same price. And so we'll see what happens. So thanks to Ken, and I'm going to put a link to his original video in the description, and at the end of this video, as I said, I'll put a link to my previous video about Tesla, my first video about buying Tesla. So if you got value out of this video, consider subscribing on YouTube or liking, of course. And if you're in your favorite podcast player, like or subscribe, whatever allows you to do if you want to see more like this in the future. And I'll see you next time.